Yo, my name is Sebastian. So I previously talked about why it was important to invest and how sticking to it long term has the potential to help you tremendously in retirement. So whether that's retirement age or if you're trying to retire earlier than that. So there's a bunch of investment opportunities or investment vehicles out there, and knowing which one to pick from could be overwhelming. Now, one of them that's super popular and that's not difficult to get into or difficult to understand, that's investing in stocks. And that's what I'm gonna go over today. So I'm just gonna go over the basic stuff. So what the stock is, what the stock market is, how does it work, how do you make money from it. Okay, say that you started a company with your own money and that is doing well. Now you'll keep putting money in it just to grow the business. Now the problem with that is you don't have an infinite amount of money, so eventually that money is gonna run out, right? And if you can't keep growing, you risk running out of business. Now, to raise more money, you have three different options. So the first one would be to go to somebody like an investor or a bank and borrow money from them. So you'll be taking on debt. Now, the second option would be to issue bonds, and that's also taking on debt. Now, the third option would be to sell part of your company as stocks. Depending on what kind of terms you get on the debt or what kind of interest that you have to pay, dividing your company into smaller shares or stocks and selling them could be a better option for your business. I mean, yes, you lose part of the company, but you can still have control and you get the money that you needed to keep growing. Now, the idea here is that it's better to have a small part of something really big than to have 100% of something really small. Now, the stocks could be private, where they're not open to the public, or they could be public, where anyone can buy them. And the latter is what we're interested in and what we're going to talk about today. When a company wants to sell its stocks to the public, the owners of that company must first decide how many stocks they're going to issue, which basically means how many shares that they're going to divide the company into and sell that to the public. Now, that number depends on how much money or how big or how valuable that they think the company is going to get in the future. And then they must decide on which stock exchange that their stocks are going to be available in or are going to be listed in a stock market. A stock exchange is a marketplace where you could sell or buy securities or investments like bonds, stocks, mutual funds, ETFs, index funds, etc. Now don't worry too much about all of those because I'll talk about them in my next video. So there's a bunch of different stock exchanges all over the world with different rules and conditions to be able to list your company on their exchange. So they moderate and they regulate all trades. So in the United States, there's like a dozen of stock exchanges, but the two most popular ones, or the two biggest ones, are the New York Stock Exchange and the NASDAQ. So the process of opening the issued stocks to the public or go public for the first time on one of the stock exchanges is called an IPO, so an initial public offering. So once a company goes public, now they become accountable to everybody that buys a share, so the shareholders, and they have to report important financial information about the company on a consistent basis throughout the year. So how do you make money in the stock market? So there's three main ways that I'm going to talk about in this video. So the first one is basically buying low and selling high. So if you buy a stock at a certain price, whatever price it is, and the value of the stock goes up, then you could sell the stock then and pocket the difference. Number two, that's from companies that pays a dividend. Now, a dividend is part of a company's profit that they could decide to give back to shareholders when their profits are strong. So it's kind of like repaying or saying thank you to the shareholders for holding on and not selling the stocks. Now, some companies have been doing that consistently, like every year for decades, and that's a good indication of how stable or how profitable these companies are. Now, they don't have to, they're not required to pay those dividends. And those decisions come from the board of directors, so it doesn't really have to do with how big or how small or how much money you're making. Facebook, for example, is a pretty big company making a lot of money, and at the time of recording this video, they don't pay any dividends. Now, they might in the future, but they don't right now. And number three, that's by shorting a stock. So you usually do that using options. I mean, we won't get into that in this video because it can get a little complicated, and I'm trying to keep this one pretty simple. There are two types of stocks that you could get from a public company. So there's common stocks and there's preferred stocks. Now, common stocks are the most popular and what you usually hear about when somebody says that they bought a stock from a particular company. Now, one advantage of owning a common stock is that you get voting rights. Now, say that the company wanted to hire or elect a new member of the board of directors. Now, that person can influence decisions on the direction or operation of the company. So, by owning a common stock, you're able to vote if that person get elected or not based on how many shares that you own. Common stock holders can also get paid dividends, but like I said before, dividends are not guaranteed. Now, another advantage of owning a common stock is that they tend to outperform preferred stocks because they have more potential for long-term gain because their value is based on how they perform in the stock market. If you hold a preferred stock, however, you get no voting rights. So you're usually entitled to a fixed dividend for as long as you hold the stock, which makes it a more stable investment. So the income from the dividend for a preferred stock is considered more reliable because it is fixed. And if for whatever reason the company was to shut down, the preferred investor would get paid first before the common investors. Now, with all that said, how do you buy or sell stocks? Now, before you do that, you need a broker. So it could be a person like a licensed professional. It could be a brokerage firm like a physical location that you could go to, or it could be an online brokerage like E-Trade, TD Ameritrade, Merrill Edge, Ally, Charles Schwab's, Robinhood, etc. So you open an account with them that will contain your money and securities like bonds, stocks, mutual funds, etc. So they're basically like a middleman where you put your money and then they make and process the transactions on your behalf at your request. Choosing which broker to go with will depend on what you're trying to do. So say for example that you wanted a full service brokerage where you also want investment advice or you want somebody to make investments for you, then you pay a lot more fees for these services. And for some brokerages, to open an account, you also need a minimum spending balance. So also keep that in mind. So there you have it. Now, understand that stocks are risky because they're volatile, meaning that companies come and go all the time. The stock market is up and down all the time. So there's a good chance that you could lose your money if you don't know what you're doing. So why invest in stocks? Well, because they are riskier than like a bond or a CD, there's also more upside. So if you know what you're doing and you're investing for the long term, so say 10, 20, 30 years, then you have an opportunity to make a much bigger return on your money and reach your goals much faster. That's all I got for today. There's only so much I could go over in a 10-minute video. I'll talk about ETFs and mutual funds and index funds in my next video, so stay tuned for that. So if you think this video was helpful, like, comment, share, tag a friend, or subscribe to my YouTube channel. Thank you guys so much for watching, and I'll see you next week. Peace!